this section, we are going to be mapping daily market structure, and the following video will be the 4-hour, and the video after will be the 15-minute, and then I'll show you how all of them correlate together. And for the sake of this video, we're not going to show you the market structure to the left. We're just going to start mapping it here so that it's nice and easy. We will zoom out and zoom in several times so everyone can see exactly what's going on. But for the time being, we're just going to say we have a high and a low. And ultimately, market structure is made when this is broken by a candle body. So we're going to play this on. We're just going to keep this a little more centered. And in this case, we'll be pulling the lowest point before the highest point. So since we don't really have any real structure breaks till this happens here, we're not going to be pulling any market structure till that happens. Yes, this would be market structure on 4-hour, but for the daily side of things, you will not map that as structure. We'll keep this as simple as possible. And ultimately, what we're looking for is this point to get broken. So we will map that as daily structure. Perfect. Now, we will be pulling the lowest point, which is down here, this green dot, to the highest point till we get any real sort of pullback. So here, to me, the impulse likely ends somewhere around this region. The easiest way to look at it is kind of measure it and see how many pips the pullback is. This is a big pullback from the top of the wick to the bottom. That's 220 pips. To me, that's more than enough of a pullback to map daily market structure. So now what we will have is a new high. And this now ultimately becomes an unconfirmed bullish trend. Unconfirmed because we've only made one high. To be confirmed, we need another high. And once again, we have to be very aware of how these highs are made. We don't want to just take the high with a wick, but the high has to be taken with a body. Meaning that this first area where the wick comes through this high, that is not new market structure. That market structure doesn't actually form till this happens here, and only by this candle body is it confirmed that we have new structure. Once again, we will pull the lowest point, which is the green dot here, to the highest point. Now what we have is a confirmed bullish trend. Now here you can see, I'm just going to zoom in a bit, you can see that we do wick above the high, but as of right now, no new market structure is created here. So this is not new structure. We're always looking for those candle bodies. So we'll zoom out a bit for now. We'll zoom back in just so everybody can see as new structure is created. I want to keep it zoomed out too so everybody can see what's going on to the left. So here now we broke this low with a candle body. And what we have here is new bearish market structure. So in this case, we'd actually adjust this to over here just because this wick is higher, and it'll be the high that takes out the low. Now you could say, yes, this is the initial market structure. Yes, this didn't break it. The only reason I moved it over is because this point is higher and it is the highest point before the low point. And since this structure point didn't violate that, if you happen to leave this as structure, that's fine too. In this particular case, we can move it over as the wick is higher than this and there was no other structure created. So it's ultimately the lowest point to the highest point. Now we will carry on playing structure. And ultimately here, we make a new high. Now I want you to make note of something here. We had a confirmed bullish trend making new highs, and then we made one new low here. However, the next time the market revisited this low, it failed to create new structure because there was no candle body. And ultimately, you have new structure once this high is taken. And if you did want to slide this over to here, that's completely fine. It wasn't a new structure by any means, it's just a lower point than the previous point. If you happen to leave this over here, that's not the end of the world either. The wicks really don't concern us. I just like to adjust them to the lowest point before the highest point. And if you didn't do that, that's totally fine too. I just choose to do that. Now, once again, we get our first real pullback over in this area here. And ultimately, this becomes the low as this takes this high. Now, once again, you're always looking for the candle bodies, and if we don't have the bodies, it's not new structure. So daily mapping's quite easy. You're gonna find it gets a little bit noisier on the 4-hour, but not too bad. The 15-minute time frame can be quite noisy sometimes, and that's why the higher time frame helps blur out that noise. So once again, we have the lowest point before the highest point. So you would map this as structure. Daily structure. Now, depending how big this pullback is, so that's about 84 pips. It's kind of right around that level where you could class it as market structure, you could not. So for 15-minute, we want a 10-15 pip pullback. For 4-hour, we want that 40-50 pip pullback. And daily, you want that 80 to 100 pip pullback. So this could be classed as structure, or if you wanted to go from this point to this high, you could class that as structure. What I'm going to do here is just class this as structure. This can be classified structure, it's right on the low end of things, but I won't be classing that as daily structure. This would definitely be 4-hour market structure change. And ultimately, we become bearish as this point gets taken. So the bearish order flow continues as we continue on making new lows. So this is again the highest point that takes out the lowest point. Now this impulse hasn't ended yet, so we'll see where the impulse ends, and that's where we'll map new structure. So ultimately, once again, we wick above here with this wick, but no candle body yet. And what we're going to do is map this low as structure. So as of right now, we are in a confirmed bearish trend. And as of right now, you can see that we are starting bearish momentum as we continue on down. So as of right now, we are still continuously making new lows. And we have our pullback. So this now becomes structure. This now becomes the high that took out the low. So as of right now, you can see that we are on an impulse down. We had an impulse up here, and current order flow is bearish as we are continuously making new lows. And if you're going to practice one concept over and over out of this whole course and you spend the most time on one concept, market structure is absolutely the most valuable concept you need to get down, because it's going to help you get on the right side of the market more often than not. So once again, we have a pullback here, and you have another structure break. Now order flow is still continuing on down. We haven't had any real pullback worth mapping yet. And ultimately, order flow becomes bullish here. Unconfirmed bullish. So we have a high point that's been taken by that low point at the bottom. And ultimately, this could be an order flow change. So as of right now, we are on confirmed bullish. Remember, a confirmed trend needs another high. So for this trend to be confirmed bullish, we'd like to see something of these likes with candle bodies. So depending how big these pullbacks are, we may or may not class them as structure. So here you have 88 pips. That's enough to classify as structure. Sometimes market structure won't look the greatest, but 88 pips is enough to classify a pullback. Anywhere in that 80 to 100 to me, and you will get structure that unfortunately looks like this sometimes, and that's totally fine as long as you understand which direction the market's heading. So here we have a new high once this high is taken with a candle body. So just so everyone can kind of see what's going on here, we had an impulse up, we have an impulse down, and now we're in another impulse up. And we've obviously made another high. Which makes this our low. Which makes this point our high point. And we've obviously created a new high here once again. And ultimately we put in another high. Now I want you to make note of how price comes through this point, and I'm just going to show you exactly what I'm talking about in just a second. So I always look at momentum. How is a high or a low taken? Did it barely take it? Did it have trouble taking it? Or did it smash the low completely and go through it like nothing? And if we look at this in a little more detail, you can see that this being the low here, this point didn't just get barely taken. This candle completely smashed this low out. In fact, it is the biggest bearish candle we've had in quite some time. So you could say there's some serious momentum to the downside. Once again, we have an order flow change. So we've gone from daily bullish to daily bearish. Again, it's not confirmed till we have a second low, but the second low happens pretty quick here. So once again, you're always looking for the candle bodies, and you may find this repetitive and boring, but I assure you it is the most important part of the course, and that it's very necessary that we make this boring and explain it as well as we can, because honestly this is the part that'll make you profitable. So once again, we have a low point and a high point. So you've gone from an impulse up here, retracement, impulse down, continues on. Now we obviously have a new low, but the impulse hasn't ended. So we do get some sort of a pullback here. If you're not sure if it's structured, just measure it quickly. So we do get over 100 pips here. That's definitely structure. Again, if it's on the borderline, if it's sitting in the low 80s or something, you may or may not class it as structure. Whatever you choose to do though, continue to do so over and over. So just to zoom out and show everybody what's going on, we can ultimately see order flow really doesn't change that often on the daily time frame. Impulse up, impulse down, impulse up, impulse down. And the idea is we want to be buying or selling in the direction of 4 hour and daily as much as we can, as this order flow is very expensive to change, meaning that if it is bullish, it costs the banks a lot of money to make it bearish. So if they do make it bearish, you can expect the bearish order flow to continue. This time frame will not change order flow very often, and the higher time frame you go, the less the order flow will change. So ultimately we have the highest point to the lowest point, and we have another high point. So we're going to zoom in a bit here. And ultimately, once again, we have new structure. So we have a new low, and here we have our pullback as we make new structure. Let's just see where this impulse ends. So this is one of those structure moments where I told you sometimes it's going to barely break it. If it breaks it with a candle body, it becomes structure. So I'm just going to zoom in, make sure everybody sees what I consider structure break. Like, it doesn't matter if it broke it by 2 pips. If there is a candle body underneath this wick, that is new structure. And it doesn't matter what time frame that's on, it remains the same on every time frame. So now what we're looking for is this pullback. So now if we said this is the high point of this pullback, so you have a low, high, low, you have another high here, whoops, and ultimately you create a new low. You have, let's try that again. So you have a low, and you have a high, low, high, low, high. We're expecting another low. Now, this is one of those moments where you really got to pay attention. So we're looking to break these candle bodies, these wicks with a candle body. So it's the lowest point that we're looking to break. So here we can see that this point does get taken by this bearish candle. Doesn't break it by much, but there is enough candle body there that you can say this low was taken by candle body, and you will classify this as structure. So to me, it's always the highest point before the lowest point. And we'll just carry on here. So now we take this high and become bullish, unconfirmed. The unconfirmed trend doesn't last, and ultimately we create new structure to the downside. So something to make note of: if you're consistently put in lower lows and lower highs, that this is a confirmed bearish trend. Now if it makes one high, taking this high, it becomes an unconfirmed bullish trend. But if it resumes the confirmed trend before, where it was bearish, this automatically becomes a confirmed bearish trend because it never had a chance to be confirmed as a bullish trend. To be confirmed as a bullish trend, we would need something along the lines of this, where we make two highs. Now that this high has been taken and this high has been taken, this trend is now confirmed bullish. So now if this became bearish at this point, taking this one low, this is an unconfirmed bearish trend. And ultimately it needs to retrace and put in one more low, taking this low. So you have one low, two lows, and now it is a confirmed bearish trend. It's very important to understand this concept, as the majority of your trades will be framed using this concept. So once again, we have new market structure here. Once again, we have a pullback, and every time these candle wicks are taken by a body, we have new structure. Now if you find there's too many structure points or they're too tight, again, it won't be a problem on daily, but on the 15-minute side of things and the 4-hour side of things, you may choose to go with the higher pips for pullbacks. For example, if 4-hour pullbacks, if I'm telling you there's 40 or 50 pip pullbacks required, you may choose to go with the higher number. With the 15-minute, I map 10 or 15 pip pullbacks as pullbacks. You may choose to go with 15. It's totally up to you. Some people like a little more structure, some people like a little bit less, but those are kind of the guidelines. So 80 to 100 pips for daily. We're going to go with 40 to 50 for 4-hour and 10 to 15 for 15-minute. So once again, we create new structure. The bearish order flow is still continuing. And we now take this high. So now you could say we are unconfirmed bullish. We got our first bit of pullback. And that's about as far as we'll take the daily. Now, what we're going to do with all these points is I'm going to connect the daily with a very dark black line. Yeah, that should be dark enough. Perfect. So the idea of this is to show you how the time frames correlate together. So when we go to map the 4-hour, we're actually going to leave all the lines on, and we're not going to do bar replay. Instead, we're going to show you how the 4-hour correlates with the daily. And what I'll do at the end of this video is I'm going to zoom in and go through everything quite slowly. So if anybody wants to pause and take a look at anything we did, you can. But I think for the most part, this is pretty straightforward. Daily time frames never really given people too much trouble. The 4 hours not even bad. The 15, like I said, it can get a little overwhelming as structure changes so much. So what we have here is all the structure we mapped. So what I'm going to do is zoom in, and we basically started at this bottom. We went on up. Once we took this high, we called that our structure break. We wait till the impulse ends and we have any decent pullback. So here we make a new high, we become a confirmed bullish trend. Now here we ultimately blow this low out of the water. And yes, this was the initial low. We moved it over to here, so it was the lowest point before the highest point. If you chose not to do that and leave the low here, that's totally fine, completely up to you. As there was no new structure created with a body, it really makes no difference. And then we went on to take this high, create new bullish structure. The bullish order flow continues till it ends. So here our bearish order flow begins. Now remember, here the order flow is continued bearish. This is not a high point that took this, because this is only a candle wick. This is just simply a highest point before the lowest point. Now order flow ends here and turns bullish. Ultimately the bullish order flow continues till it turns bearish again, and that's where we are today. We're going to cut this video here, and we're going to start off in this exact same section for the 4 hour in the next video. I'll see you guys there.